Jeff Peterson from Heartland Farm Partners is our market analyst this week. It was a rough start to the week on Tuesday as July corn lost more than 7 cents a bushel and July soybeans shed nearly 14 cents. Both commodities bounced higher Wednesday, a day after the USDA listed 65% of this year's corn crop in good to excellent condition. The agency's first ratings of the season indicated less favorable settings to the east. 17% of corn in Indiana and 15% in Illinois were categorized as poor to very poor. We talked with Jeff Thursday morning and started by asking about current conditions.
You know, the crop condition report came out a little less than the industry thought, 65% good to excellent nationally compared to the 68% average. And so as a result, that gave the market a little bit of a bounce. We personally don't think, both for Nebraska and nationally, that the crop probably is that good, Jeff. I know when the score came out, on the Nebraska numbers, 76% good to excellent, that compared to 72% last year. We really don't think the crop is that good, but as we look forward to next week, we think we'll probably see both of those increase 1 to 2% again.
So sort of a two-part question. Where are the weak spots? And in those weak spots, is there some switching from corn to beans?
Yeah, so I think if you were to just make some general broad brush areas, you'd say actually North Dakota and South Dakota, you see a little bit of problem because of dryness. You move over into the eastern corn belt, take Illinois, Indiana, Ohio, Missouri, a little bit of Arkansas, you're going to look in those areas and say it's because it's too wet. Their conditions are way below what you'd expect to see. In those areas, in the eastern corn belt, there is some changes happening. A couple changes of noteworthy, I think, is one, you're seeing a little shift from corn to beans. You're seeing an increase in prevent plant that's happening, but you're also seeing a big amount of replant that's happening in those areas. We're also hearing a more replant in Nebraska, though, mainly on the soybean side, not so much on the corn side.
This week, bloody day on Tuesday, bounce back a little bit on Wednesday. What's going on here?
I think if you look big picture, you'd say this is a market that's really kind of uncertain about where it's going to go, and it can't develop any conviction really either way. So all of a sudden we come in on Tuesday and they're looking at maybe a little bit better weather. Then the crop condition numbers come out in the afternoon and they see that the crop isn't quite as good as they thought. We bounce back higher immediately and gain back everything that we'd taken away the previous day. And we're going to see more of that type of action until the market can get certain about the direction that it wants to go.
Funds still short in corn?
You know, they are. They're currently short 173,000 contracts. That would have compared to the 177,000 contracts that they were short coming out of the Commitment of Trader report. They do also have a pretty big fund position on soybeans too. 83,000 contracts short compared to 62,000 contracts that was in the Commitment Trader report from last Friday.
Can you analyze that erosion we've seen in the soybean market overall?
Yeah, it's a number of steps really. If you go back, we had a really nice uptrend that was going in soybeans, but then along comes what we'd expect out of Brazil, a scandal. And unfortunately, that went ahead and put a lot of pressure on the real. And when the real dropped, you saw a lot of farmers selling coming out of Brazil. And when that happened, it technically took away some of the steam we'd gained in that market, and the market fell. Ever since then, we've actually had some more discussion that's going on out there in the marketplace about more changes in acres from corn over to soybeans. So we're at a point right now where we think we're finding some good support, but it's going to take a while for that bean market to make its way back up to the levels where it was at.
Update me on your guys' positions.
Yeah, right now, if you sit back, the name of the week actually, Jeff, is please have patience with this market. And don't get in a hurry. We're sitting here on the old crop side. We're only willing to sell on the old crop side what you absolutely have to be able to generate some cash. What we'd actually recommend doing on the old crop is actually locking up some of this basis. And the nice part about doing a basis contract at many of the buyers is that you can actually get a cash advance. So that can generate some cash flow for you. As we look over the new crop side, we're wanting to be patient there also. First on corn, we would really like to see a 4 in front of the December 17 corn futures before we'd make any sales. So we've got a little ways to go there. On the soybean side, we'd really say more time there. This is the wrong time of year on the bean side to make any new sales. On the bean side, we really need to get out into August and see what that weather's going to be like before we make any sales there.
If you're willing to hold that old crop corn, are you looking at a time frame where that doesn't hold anymore, or are you willing to try and even carry that into the fall?
Yeah, no, we don't want to carry it in the fall. There's a couple things. One, on the basis side, you want to get the basis locked up because there's a lot of grain to move out there yet. And as a result of that, What we want to make sure we don't happen is get caught with a really bad basis level. I think on the corn side in regard to the futures price, I think you got to get rid of most of that corn by the middle of July though. I think if it hasn't happened and the movement hasn't happened by then it's probably not going to. So I think that'd be a date that I'd have in mind right now.
June crop report on Friday, your expectations?
Yeah, this is an interesting one. So let's just kind of break it apart. We know that on corn and soybeans, we shouldn't see any changes in acres yet. On the yield side, there won't be any changes in yield on the soybeans. On the corn side, it's possible. The last time there was a change on corn, we'd have to go back to 2013. They did drop the yield 1.5 bushels. Okay, we don't think it'll be anything like that this year, but we think that it's possible that they could lower it maybe a half bushel just based off of what the conditions are so far. On the demand side overall for corn and soybeans, what we'd really look at is that we'd expect the ending stock numbers for both corn and soybeans to basically decrease based on a little bit better demand than what we've seen out there.